I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be on the show again.
Did you get, as a financial advisor, a lot of phone calls from clients worried about all the red on the stock market boards on Friday and Monday?
We got a few calls, not as many as you'd think. Of course, it's emails these days, but there were a couple of clients that had put some money into the market recently. One client in particular had sold her house for $1.2 million. So she was concerned that she just bought in right before the big correction. But of course, we have been careful with this market for some time now, probably for too long. So we put most of the money into safe things, and only a little bit of it into the risky stock market, because we felt there was a correction overdue. And this is only like less than a 10% correction. So it's been 9 years since we've had a 20% correction. So we are overdue for a correction, and people in the stock market get better returns over the long term, quite a bit better returns than other investments. But the downside is they have to live with these 20% or more corrections that come along once every 5 or 10 years. So if this is the correction, then this is the price we pay for being in the stock market, I guess.
Well, the Dow gave back everything it gained in the new year, but going into that, didn't it go up 30%?
It's up. It's been up 20%. Well, we're talking about the U.S. market, of course. The Canadian market has underperformed since 2008, but in the U.S., the stock market in the U.S. has been going up 20% per year for several years. So, in Canadian dollars. So it's been a phenomenal investment, and so even a 20% correction really would only take it back to something like 2015. It's kind of like houses in Toronto, right? A 20% correction, which we're actually getting now in some of the outlying areas, like what they call the 905 area code. It still doesn't take it back to affordable. It just takes us back a couple of years, and it's the same with the U.S. stock market.
For people who own homes, are they going to be looking at a massive correction like this? Or with real estate, it's always a lot more gentle?
Well, the problem in real estate, so the difference between the two is primarily related to the amount of debt involved. So people generally, I don't know, actually, I'm in my 40th year, and I can count on one hand the number of people that I can remember that came in with a pile of borrowed money to buy the stock market, and it usually doesn't work out. But of course, in real estate, it's the opposite. I don't know anybody that buys real estate without borrowing some money. At least, especially at the beginning. So the corrections in real estate are actually much more painful because once your equity's gone, you're still on the hook for the debt. And the only way out of getting out of the debt is to declare personal bankruptcy. So the corrections take a lot longer in the real estate market, but they can, if they persist and continue to go down 20 or 30%, as I'm predicting, for people that have a lot of debt, they can be much more painful. For instance, the two big crashes in the stock market that prior to the global financial crisis was the 2000 dot-com bubble and the 1987 stock market crash. One day down 20% in 1987. And both of those people recovered from quickly because A, people generally don't have a whole lot of money in the stock market, and B, they don't borrow money. Like those dot-com stocks were extremely expensive, ridiculously expensive, but very few people borrowed money to buy them. So you can't get really badly hurt if you don't borrow money. But in the real estate market, you can get badly hurt because you're on the hook for the whole thing, the debt and the house and everything.
Yes, and with the Bitcoin phenomena, credit card companies have started to refuse to lend people money for it, and your bank wouldn't lend you money for a Bitcoin either.
I don't think they would, no, and I suspect the actual amount of dollars that it's got in. I mean, they show Bitcoin going to 20,000, now it's down to 7,000, but how many dollars actually were put into the Bitcoin? You know, you can post prices for these things, especially when the insiders control the posting of the prices. There's no real full disclosure. Even if there's only $1,000 worth traded, that could be the high price. But I suspect, I could be wrong, but I suspect that when people speculated in Bitcoin, they were only taking a small amount of money. And I mean, even on a credit card, most people could only do $5,000 or $10,000. They can't do $100,000 on a credit card. So it is quite a phenomenon that people would be buying into something as obscure and sort of dark and hidden as the Bitcoin currency, but I suspect they didn't borrow a lot of money to do it. So I don't think it'll be a major systemic problem for the economy, unlike real estate, where because there's so much borrowed money, that will cause a problem for the economy and potentially a big problem for the economy.
Well, Hilliard, you and I both know if you go to a party and that's all people are talking about, that's not a good investment. Once your general semi-drunk people are saying, did you get your Bitcoin? Did you get your .com stock yet?
Well, the thing that I got was that I guess it was close to New Year's there, was up until then it was mostly real estate, and then it changed, and now it's Bitcoin and marijuana stocks. So those are the two. So I thought, something's changed here, and people desperate to ask me, and of course, I don't know a whole lot more than anybody else about these things, except that I know that the marijuana stocks are extremely expensive in relation to any kind of measure of what the future sales are likely to be. So we'd be very careful. But I think this correction, one of the advantages of this correction, and corrections actually have a good side to them, in that when people are kind of in a speculative spell, as they have been for a number of years now, it brings them down to earth, and it probably helps them avoid getting hurt too badly.
And of course, for the sharp traders, that's a great opportunity to buy the really valuable ones.
Yeah, if the correction lasts long enough, now this unfortunately hasn't lasted long enough to really uncover some great bargains, but if it lasts long enough, that's when you get your really great advantages in any market. But the key thing to watch for, in my opinion, is for when people are forced to sell. So far, the market's gone down. People phone their broker, or they email their broker, or they go online, or they whatever. But nobody's really forced to sell yet, I don't think. And especially in the real estate market, that's the thing to watch for. Is you think about somebody who owns a house, doesn't owe a huge debt on it, and the prices are down, and they say, well, I know my house is worth $1 million, and the people are listing the same house for $900,000. I'm not going to list it. So that isn't, you're not going to get a bargain from that guy. He's just going to hold it off the market until he gets his price. Where you get the really interesting bargains are when people are forced to sell. It's usually forced by the lenders. So where you first see it, and we're starting to see it in Toronto, is with new home builders. So the new home builders always have a lot of debt. You can't really build any significant number of homes without borrowing some money. And when they have to discount their new homes in order to move the inventory, as business people, that's when you start to see the bargains. And now again, takes a while, because most of the new homes are on the outskirts of the city, and people in the center of the city can say, well, I've got a better location, so I'm not going to discount my price. So it has to be forced selling, often from the lender, and then it has to last long enough that it spreads to all houses, not just the ones on the margin.
We'll have more with Hilliard MacBeth right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, usually when we see a touch of panic on the stock market, people take a look at gold and silver. Did they do that?
Gold went up a little bit. I would think it possibly could go up a lot more if people get disappointed with the Bitcoin. The whole thing behind Bitcoin is people don't trust paper money. They call it fiat money, and they say, I don't trust it, and I don't trust the government, and I don't trust. The government can print as much money as it wants, and so they go into Bitcoin. And but then Bitcoin disappoints for some reason, and then they come back to the ancient measure of value, which has been for centuries, has been gold. Now, there's a lot of criticisms of gold. It doesn't pay any interest, costs money to store. It's really weird, as Warren Buffett points out. It's really weird that we spend all this money to dig it out of the ground, refine it, and then put it back into storage. But that's what we do. But the thing about it is, central banks like the U.S. Central Bank, the German Central Bank, and the French Central Bank all own a lot of it, and apparently Russia and China are buying more of it as central bankers also. So it does seem to have that cachet of being a store of value, and it did go up a little bit, but I wouldn't say it went up enough to prove itself as a good store of value yet. But I would not be surprised to see it going up quite a bit more.
Well, I thought about this in theory a few weeks ago, and it's actually happening, that there's a cryptocurrency or two now that's connected to gold. So you actually, and what's more, with crypto gold, you don't have to buy storage space and you can instantly transfer it. Yeah,
I don't know why people would do that though, because you can buy gold ETFs. There's a couple of old ones going back to the gold mania in the early. It was actually 1980 when gold originally hit $850 an ounce, and it's now U.S. dollars. Now it's at $1,300 and something U.S. dollars. So it hasn't moved up a lot since 1980, almost 40 years ago. But there were a couple of ETFs created even way back then, and you can trade them on the stock market. It's kind of hard to buy gold directly. And the other thing you can buy, and this Canada has most of the good gold mining companies in the world listed on the Toronto Stock Exchange. You can buy shares in companies that mine gold, and they often have really big gold reserves. And at the moment, they're not expensive. So I can't recommend individual stocks, but that certainly is worth looking at, is buying it through the stock exchange, because all the gold that they have in reserves goes up in value as well as just their current production. And they're all making money at these levels. Their costs are around $800-900, including everything, including reclamation of the land after the mine is shut down, and price is $1,300. So there's a profit margin there, and if the price goes to $2,000 or higher, then there'd be a very big profit margin.
Yeah, I remember when the ratio used to be they had to make $1,100 an ounce to break even. And then after the last crash, they became much more efficient. Plus, the price of energy came down, which made mining a lot cheaper.
Yeah, the thing that they added in, so now they've got this thing called all-in cost. So they used to say the price of gold, the cost of gold was $500-600 an ounce to mine, and that was just the basic stuff. But now they're required to include every single cost, which includes a bunch of other stuff they didn't used to include. And so the average, I think the average cost now is up close to $1,000. But it's basically the efficiencies, as you say, that they've gained through using larger trucks and how to move the overburden and the mining and all that is helping. And so some of the best ones are in Canada, as I say. They're not necessarily Canadian mines, but they're listed on the Canadian Stock Exchange.
Also, as you mentioned, China and Russia have been stockpiling gold for the last 6-7 years. Canada and Britain, on the other hand, sold off all of their gold at bargain prices.
A long time ago. That's
yeah.
Right. I don't know. I think they felt that it was no longer useful, but it could very well come back into fashion again. And people will be looking for the next thing. And if real estate and Bitcoin disappoint, then we don't know where it's, for a long time it's been the store of value has really been real estate. It hasn't been the stock market, it hasn't been gold, it hasn't really been anything else but real estate. And so we're quite a ways away from people giving up on that idea. I think people are still pretty convinced that real estate is the store of value. But if we get a 20, 30, 40% correction over the next couple of years, that belief will be badly shaken, and then other stores of value, or speculations you could call them, will move to the front of the line again.
Isn't one of the reasons, though, real estate in Vancouver and Toronto goes up in price is that both cities have a large immigration of people every year?
That's the myth, but it actually isn't correct. So the biggest influx of people, including foreign immigration as well as interprovincial migration, has been to Edmonton and Calgary by far. So Edmonton and Calgary have both been well above 2% annually for the last 10 years up to 2016. And Vancouver and Toronto have been closer to 1%. And yet Edmonton and Calgary home prices have not really budged in the last 10 years much. The Calgary slightly higher and Edmonton slightly lower than prices were 10 years ago. So, of course, the prices 10 years ago in Edmonton and Calgary were very high because of the influx of people, but it's leveled off since then. So, no, it's mostly what are the lenders willing to lend, and what is the speculative urge to buy real estate, and of course the foreign buyer comes into it there's foreign immigration, but there's also just the foreign buyer. They don't actually migrate to Vancouver; they just send money. So to get their money out of China, say, they move it to Vancouver, but they don't get counted as an immigrant because they don't actually make that move. So it's very complicated combination of things, but I think the biggest factor has been just people, and I've talked to dozens of people in the last 3 years. Just a very strong belief that house prices always go up. Therefore, I have to buy right now, because if I don't buy right now, later on it'll be more expensive. And so that's why I say if a correction happens 20, 30%, then people will lose that belief that they have to buy right now, and that'll change everything in a big way. I'm just looking at the Vancouver single-family home prices, for example, and they haven't really they haven't really soared a lot in the last 2 years. What has gone up in Vancouver a lot has been the condo prices. But of course, single-family home prices are $1.5 million, and they had a dip in 2017, and they recovered, but they're basically roughly level with where they were 2 years ago. So, so that, the fact that the condo prices keep rising is basically there's a bunch of speculative people in there, and they've moved to condos away from single-family homes. So, once that, you just need enough of a correction to break that speculative urge, and especially the foreign speculation, and then you'll start to get back towards affordable prices. But it'll take years. It's not going to happen in months. It's going to take a couple of years at least.
We'll have more with Hilliard MacBeth right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Vancouver imposed a 1% tax on empty homes, and people had, I think, until the end of the month to register last month. And they're finding that, they have thousands of vacant homes in Vancouver, including homes owned by the city.
You know, the lot of the talk about, will there be a housing correction is centered on the moves that the government made, including foreign empty homes and foreign buyer tax, and one that barely gets discussed, although it's very, very important, I think, and that is the CRA crackdown on the people assuming they have the exemption for principal residence when they don't necessarily have it. And there could be more coming. For instance, one of the big ones I think is important is the numbered company trust loophole, where people put purchase in a legal entity like a corporation or a trust. And I think that would be good. Just the transparency would be enough to help quite a bit there, because we can't find out who actually owns these homes. We can find out a numbered company owns them, but then the numbered company is owned by another numbered company based in Panama or something, and it's impossible to trace it all the way back to the source. So other countries have successfully closed those loopholes, and I think Canada would really help it, especially in Vancouver, if we did close those loopholes. And I suspect the government will move to do something like that. However, the main thing will always be the speculative urge when you see prices rising, and then when prices stop rising, when that speculative urge goes away, whether it be foreigners or locals, it doesn't really matter. Locals are always going to be bigger than foreigners. Then that changes the dynamic quite a bit. And if somebody has to sell for some reason, like the lender's forcing them to sell, or there's been a death and it's a sale from an estate or something like that, then that's when people start discounting their prices aggressively in order just to get the sale done.
Well, sure. I mean, I saw in Vegas $200,000 condos after their real estate crash selling for under $60,000.
Yeah, and that was probably the lenders that were pushing that. One of the big banks, I think Deutsche Bank, ended up owning a whole pile of stuff there, and they didn't want to own it, so they just put it up for auction. And we had to go to the court and just put your bid in. People were bidding $50,000, $40,000. You could drive by the building, but you weren't allowed to actually go inside the condo. So it was sort of a bit of a risk. But most of these condos have probably never been lived in. They'd been built, but were just owned just by speculators. So, and those things can skew the average price on the downside as well. So in Vegas, it was the hardest hit place in all of the United States, because these sales would have skewed the average price downwards. And just like a few sort of high-end sales of $27 million property in Point Grey in Vancouver skews the price on the upside on the rising market. So there's no perfect way. In Canada, the MLS data doesn't, which is all the real estate board's report, does not include forced sales through foreclosure or power of sale, that sort of thing. So we'll never know the exact details of it, but you can get a sense that things are leveling off now, and probably in Toronto, for sure, in the suburbs of Toronto, prices are down for single-family homes as much as 20% already, and I don't think that'll be the end of it. So, and I think similar things will happen in Vancouver as well.
Hilliard, thank you so much for chatting with us.
Nice talking to you again, Jim.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, we can be emailed at info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.